So, in this uh, episode of the series, we're going to talk about tax reform and paying elected officials. In the last video, I believe I hinted that there would be a totally different system for paying elected officials. Currently, U.S. Congress can set their own salary and even give themselves raises, um, even when they haven't accomplished anything they promised to their constituents. There is not a single profession in the world that operates like this. You wouldn't ask your boss for a raise after a bad performance review. So, our representatives work for us, and I want them to make a good living, even above average living, but I also want them to be accountable. Most people think that their representatives are the shareholders, they're the people in charge of the company. But in reality, the citizens are the shareholders, and our representatives are the store managers that we hire to manage the day to day operations of the government. If a manager lowers your costs and raises your profits, of course you'd give them a raise. If officials lower our taxes and spending, and there's a GDP growth, of course we will allow them to ask for a raise. So, uh, in this plan that I have, there would be a ceiling for the pay of elected officials, and it would be something like 3 times the GDP per capita or some other metric that correlates to the average citizen's income, the average household income, um, or the GDP per capita, something like that, and then 3 times that. So Congress sets their gross salary below that ceiling. It can be at or below that ceiling. So um, if the average household income or the GDP per capita is 50,000, uh, they can make their gross salary at or below 150,000. So that's 3 times the average. And then there's a we withhold a percentage of their gross salary. So this is called the elected official income tax, and it would be all the tax rates that they impose, that a level of government imposes. You add all of the tax rates together, plus the deficit spending rate, plus uh, the amount of money that comes in from fee revenues. So fees for things like um, court fees, um, just filing paperwork, all the revenue that comes in from that. Compare that to the GDP as a percentage. Um, I think that's it. It's just those three. So, for example, let's say we passed the limit tax this year, and we enacted it in 2019. So we're going to pass it this year and enact it next year. Let's say that the average salary hasn't raised, and it's about 50,000 a year just for round numbers sake. Um, Now there's a 10% sales tax, uh, and then there is two income tax brackets. I know we said ideally there would be no income tax. Well, let's say that we couldn't get the ideal, and there's two income tax brackets. There's a 5% and a 10% tax. And then federal revenue is $3 trillion, and spending is 3.3 trillion. Now, the revenue that the federal government gets from fees is 160 billion, and the GDP is 16 trillion. So just for easy numbers, a lot of things have not changed. So what you're looking at is a 10% for the sales tax plus 5% and 10% for the income tax brackets. And then the rate of deficit spending, I'm not sure what the exact term would be, but there would be 10% there. Then there's 1% of the GDP is fees, and so that's a 36%. That's 36% that is withheld from the salary of elected officials. If their gross income is 150,000, which it probably would be, then their net is 96,000. Now, yeah, this seems pretty unfair, and I admit that Congress, if we passed this this plan, Congress would get a bad deal in the beginning, but government spending will decrease, taxes will decrease, and the cost of living will go down. So, oh, and one other thing, not only will the cost of living go down, but incomes will also go up. So if you like this video and you're wondering how you can help with this, you can help spread the word, like our page on Facebook, and share your thoughts in the comments below. Join our Patreon, and there you go right there. I'm going to try and put a link in the description to the Patreon.